Hey, Kyle, good to see you. Today we have a really important topic. We are talking about how geopolitical events affect the market. Specifically, of course, we're talking about the tension with Russia right now. US equity markets are lower as investors try to determine what impact Russia's latest moves will have on the global economy. Investors are pulling money out of stocks and into traditional safe havens like gold and bonds. What I think tells a really interesting story here, Kyle, is asset prices year to date. We shouldn't be surprised that we see oil at the top of the list right there, right?
Yeah, absolutely. And hello, Erin. And looking at this, Thursday, the 24th was a really fascinating day. Okay,
Hmm.
because markets started really low. Okay, we're down almost 3%, and then they finished up on the day quite a bit. And I think what this shows is that, we've got a huge crisis going on over there in Russia and Ukraine. But at the same time, I think the arrow kind of points back to the underlying issues that we've had in the past, and that is exactly oil, right? That's the
Right.
centerpiece of this inflation story that we've been hearing so much about. To start the year, markets were down because they were worried about all these interest rate hikes that were going to attack inflation. And Biden comes out and speaks in the middle of the day on Thursday the 24th, and what does he say? We're going to make an effort to attack oil prices,
Hmm.
and markets respond positively. So I think yes, it is an absolute crazy thing that's going on. Markets are going to sell off, and people tend to react to that on the front end. But we've still got these underlying issues that we're dealing with.
Right. So let's talk about history here because we know you have a team of investing experts behind you. That includes Brookstone CIO Mark Diorio. And he actually took the time to crunch the numbers on several other geopolitical events. Let's take a look at this. I know that you've studied it, but what he found is that the average 1 day decline is negative 1.14%, with a total event driven drawdown of negative 4.39% over 16 days, and then recovering in an average of 35 days. We live in this moment. We think that we're going to be here forever, but statistically, that's just not what's happening.
I know, and it's crazy to think about, right? You have a war, and you think how does it not affect the market? Well, it does on the front end. People tend to have that knee-jerk reaction. They're worried about the worst that's going to happen, and then as we start to zoom out, perspective starts to kick in, and you start to think, okay, well, what lasting economic impact is this event going to have? And most of the time, those are pretty muted from these geopolitical events.
Mhm. All right. And now the other thing that you and I love to talk about is behavioral finance. When we invest emotionally, when we get scared by this volatility, we want to pull our money out, right? But then when we do that, you often miss out on the best days. This is just incredible to look at, Kyle.
It really is. This all comes down to the positioning of your portfolio, right? If you're positioned very aggressively, you're going to start to sweat these crazy events and these big market moves. And most of the time, or some of the time, it's really not an appropriate place for everyone to be.
Mhm.
So it's all about looking at the positioning of your portfolio. If you're not sweating the day to days, you may be more positioned more appropriately. But um, we're looking at things on our end that are kind of unique, looking outside of the traditional asset classes or the 60-40 portfolio. And we've talked about these before, things like buffered ETFs, hedged equity funds, but particularly structured notes,
Mhm.
structured income notes in particular. During times of these high volatility times, we can negotiate prices on the notes that are very, very impressive. So
Right.
it's all about putting something together and having the guidance to help guide you through these rough times. That's what we're all about.
Right, and finding those pockets of opportunity. And I think we just should remind everybody that, Kyle, this is your job. You're there to sweat it
Mhm.
if you need to. Otherwise, if anybody has a question, I'm sure that they, can call you. You can talk them through this and about how you are being disciplined with this approach to weather this volatility.
Yes, absolutely. And the best way to do that is through a website,
Hmm.
firstcoastfinancialgroup.com. Happy to help. If you're one of those people that is really nervous and is shaking watching the headlines, it may mean you're not properly positioned.
Yeah, you're right. It's part of a thoughtful discussion. I love it. Kyle, thank you very much.
Thank you, Aaron.